Good morning, traders and investors. Roger Scott here, senior strategist for Trading Pub. It's Wednesday. It's September 6th. It's about 7:46 in the morning. The market's not going to gear up to open up for another, hour and 44 minutes or something to that effect. Boy, oh boy. As I was predicting yesterday, the market is down. But before we get into all the good stuff, make sure to like our channel, subscribe to our YouTube channel. Send me an email if you'd like, rogerscott.com. Most importantly, join our Telegram group. You could find the link above or below this video, or just go to rogerscott.com/Telegram. And there's a special link for you to sign up to our private channel. It's no cost, and I give a lot of free goodies, reports, trade ideas, price levels, and pictures of my senior assistant, Clyde. You don't want to miss out on that. Make sure to comment below these videos as well. I respond. These answers and questions help everybody. Now let's get into all of this good stuff. So unfortunately, I was right yesterday about the downdraft in the market, but it's not hitting all the sectors as I thought it was. Actually, I'm surprised again at technology, because technology is holding up a lot better, which makes absolutely no sense, and I'll explain to you why. So as you can see here, the Dow's down 64 points. This is randomness. Nasdaq's down 26 points. This is all random trading action. We're not going to get to see the market for what it really is till about the second half of today, maybe tomorrow. Why? Well, Labor Day, big holiday. People are still on vacation. I've got people here in my house that are just leaving today and tomorrow. People don't just move because vacations are over. It takes time for society to get back on track. It's just how we work. People take time. So the bottom line is we'll see probably tomorrow the true nature of this market. Meanwhile, we still have earnings. Today you've got Dave & Buster's after the close. You've got American Eagle. You've got GameStop. No, I'm not going to talk about GameStop. They're expecting negative 14 cents. If you want to know about GameStop and the history of the stock, go to Reddit. You could find more information that I could ever possibly give you. You've got Sportsman Warehouse. So again, you've got a little retail. Whenever you see retail stocks, remember retail impacts the market because it's such a big component. You know, retail makes up about 70% of the GDP. So we've got to be really, really careful. And then services makes up the rest. Tomorrow, you've got apparel companies. You've got Smith & Wesson. But as you can see, we're really gearing down. Friday, you've got Kroger, which is a real big one. And here we have our expectations. So you could see the expected move, on GameStop is about 14.5%. We'll see if that'll happen. And yesterday you had Zscaler and Asana. But again, these are smaller companies. Earnings are not having as big of an impact on the stock market. Now, bonds. Notice these two red candles on bonds going down, on volume increasing. This is not good. And this is very bad for real estate. Why? Well, higher interest rates are bad for interest rate. It's just a very specific thing, which is one of the reasons why Toll Brothers, for example, have been going down. You see this? Higher yield. Although it's still in a good trend on a swing high. But be cautious. Be very, very cautious, because interest rates could be moving higher because yield is going down. Yield is going up as interest rates go down. We're below the 200, the 100, and the 50-day moving average. And we didn't make it to the upside. We couldn't even test the 50-day. And volume is moving up, and we're breaking lower, and people are coming back from the holidays. Be careful. This is really bad for real estate. You would think it's bad for technology, but let me show you. QQQ, although it is coming a little bit lower, it's holding on above the 50-day moving average. Now, again, volume is dead. I mean, there's no volume, which is expected. It's going to probably pick up today and then on Friday, because we're post the holiday. But I'm not really happy about this, because it shows that there's very little follow through. I mean, we kind of just died off. But again, holiday weekend, and we're above the 50-day moving average. I'm willing to give technology a little bit of a time to stay up here, because it is above, and it's outperforming the S&P, which is already below this red line, almost ready to touch the 50-day moving average. And the Dow, the blue chips, are way, way down. So if you were to look at the relative strength of the market right now, and I'll go through sectors, it's very obvious that S&P, which has both technology and blue chips, is weaker than is weaker than the QQQ because QQQ is just all technology. Then you have some technology. Then you have some technology, but a lot of blue chips. And here you have mostly blue chips. So it's clear right now. It's very, very clear that technology is gaining ground at the expense of blue chips. That's really, really obvious. And if you look at the sectors, which you will see right now, you could see, look at energy. Energy looks good, right? Technology closed on the upper end of the range yesterday. QQQ, upper end of the range. Didn't break a high like technology did, but it didn't close down yesterday. Communication, it didn't close down yesterday. But look at the blue chips. Material, look at that bar. S&P 500 because of everything I'm talking about. And look at consumer discretionary, up, closed higher, not lower. Look at the Dow, straight down bar. Look at industrial, down bar. Look at mid caps, down bar. Look at financial, down bar. Look at home builders. Oh boy, and they didn't make a swing high here either, which is bad. Look at the Russell 2000. Look at healthcare. Yep, healthcare. Look at real estate. This thing isn't. Look at retail. Look at utilities, and then look at consumer staples. But technology, QQQ, communication, and consumer discretionary didn't do that. They didn't do that, which is why the QQQ is still not giving up the chase. Well, if this thing can take out the 381 level, man, we can be in a much better position. But as far as the Dow, folks, we're hitting the 50-day moving average yesterday. That's bad. So yes, I'm increasingly becoming more bullish. Let me show you where the market cap is right now, where the love is right now. Technology, QQQ, energy, S&P because of the QQQ, consumer discretionary. Be careful with basic materials right now. Communication services. So again, and if you look at the last week, energy, technology, consumer discretionary, S&P communication services. Look at everything down here. Blue chips, blue chips, blue chips, blue chips, blue chips, mid caps, sort of blue chips, definitely blue chips, small caps, blue chips, blue chips, blue chips. And then here's everything related to technology and energy. So you could clearly see right now where the market cap is going, which is kind of odd because you would think with the bonds going down, it would have just as much pressure on technology. But that AI revolution is just keeping those tech stocks up. What are you going to do? Our job is to report what it is. But that's good. That's good. That means we're seeing some semblance of strength just from the sector we didn't expect. So technology is definitely outperforming blue chips right now. PMI, today we have the Purchase Managers Index after the market opens. We have the Institute of Supply Management Services. And remember what I told you about this week, the whole rhyme. Every week has a rhyme. This week it's all about prices. Factory orders and demand supply for prices, manufacturing producers, managers. We want to know how the economy is going. Now, these are not big Fed data, but they give us data points. These give us data points that we need for the CPI, and it gives us data points for the PPI, and it gives us data points for the GDP, and the Fed looks at this. We also have international trades and goods and services, and we have Fed speakers. Now, let me give you very quickly the big picture of what to expect today in terms of news, and then we'll get into the nitty-gritty, and I like the nitty-gritty. Because today is I'm going to give you top sectors and top stocks. You already know what the top sectors is, but I got to give you top stocks. So investors are worried that higher oil prices, I think it's more China than higher oil prices. Please, oil prices were higher before, may lead to increased inflation and potentially hinder the outlook of global economy. I don't think that's the case. I don't think oil is going to be the biggest factor. I think oil is going to be maybe the fifth factor down the line. Home builders retreated with the 10-year Treasury climbing to a 10-year high, which means bonds are climbing to a one-week low. Lenner plunged 4%, Toll Brothers down 5%. But remember, these stocks are still holding on really well. Xylem fell 4%. Let's see here. AB&B did really well. Energy stocks gained ground as the price of crude oil rose to a 10-month high on more supply cuts from the East and Russia. Christopher Waller said Tuesday, the Fed, he said, leeway to proceed carefully with tightening. Even recent data demonstrates continued easing of inflation. Maybe he said that 2 days ago. I don't know. It is. It's getting better. It's just taking a lot longer, and it's going to take a lot longer. There's nothing that is saying we need to do anything imminent anytime soon. He's right, but there's nothing saying that you don't have to do anything in the near term either. So take it easy. Don't give the best case scenario, Mr. Waller. There's only a 7% probability that the Fed's going to raise rates this month, but there's a 40% chance. And if interest rates keep moving lower, and if global economy like China keeps putting pressure on us, this may increase to 60%. As I mentioned, we have the Institute of Supply Management Non-Manufacturing Index. That'll give us an idea of how non-manufacturers are doing in terms of data and price and demand. We also have the Purchase Managers Index. I can't say that right. Purchase Managers Index. All right, I got to remember that. We'll see how that goes. These are not huge reports, but they're data points. Investors are going to focus on the global composite PMI. That's coming out as well during the trading session. We have the U.S. trade balance coming out as well. Europe, disappointing German factory orders and uptick in oil prices are raising inflation concerns. Another reason why blue chips are down, but technology doesn't want to stay down. Data on Wednesday showed that German industrial production fell more than industrial orders fell more than expected in July, indicating the challenges facing Europe's largest economy. China's in the crapper. Germany's not doing so well. Europe is not doing so well. China closed slightly higher, that gives us a little bit of a boost. They saw gains in property and energy stocks. Now, you would think energy stocks when energy stocks go up, right, it causes fear of inflation. When there's fears of inflation, interest rates go up. When there's interest rates go up, property stocks go down. But property stocks are up. China, what are you going to do, right? Investors are anxiously awaiting trade data. I am also anxiously waiting trade data to see how things do, because China can put, again, Germany, China, these are data points. Japan closed higher, extending a winning streak to an 8th straight session. They're really just doing their own thing right now. We've got a lot of earnings stocks, but none of them are really all that high, and there are some movers that I'll discuss. Now, in terms of market, strongest and weakest stock, we already know that energy and technology, the energy, consumer discretionary, and communication is the strongest. Technology. And we know the weakness is in consumer staples and utilities right now. So let's go and look at our stocks. Let's take a quick look at the S&P 500. Let's see what we're looking at here. Well, NVIDIA right away. Lilly looks really, really good here. Adobe looks great. Adobe, I like Adobe right now. I do. I like Meta right now. I'd like to see Meta a little higher, but I like Meta. I'm assuming it's above the 50-day moving average. If it's not, avoid what I'm saying right now. But here's where the money is. ANET, Adobe, Meta. Let's see here. Oracle's looking really good here, but it needs to come up a little higher. I like Oracle right now a lot. Oracle looks really good right now. So stick with the technology for today and maybe tomorrow to the upside. Stick with tech. Let's not mess around, okay? As far as stocks that are going down, well, I think Dollar General is going lower. It just broke the low, and I think it's going lower. I think Etsy is going lower. I think Enphase Energy is going lower. So I just gave you several stocks. Now, let me give you some day trading picks too before I let you go. Here we got STT. Now look at the stock carefully. It's a $70. Wait, that's not it. That's not the stock. Sorry, that ain't the stock. Wrong stock. UPTD. Wrong stock. This one. All right. So you could see how the stock lost 40%, up 40%. Let's look at it on a day. If this stock, listen to me carefully. If this stock breaks $13.50, short it. I think it's going to go down all the way to $12. It's a crappy stock. $13.50 short. Now we got one more. VERB. Look at this stock. What a crazy mover. The stock is moving up. Yesterday it moved up. It already is losing relative strength. A lot of relative strength. If this stock, oh boy, if this stock trades below $2.20, $2.19, sell it, and sell it again. It doesn't have any volume. It doesn't have anything following it. So definitely a stock that you want to liquidate or sell, if you're long, get out of it. Now, in just a couple of hours, at 10 a.m. Eastern time, I'm going live to cover something you can't afford to miss. There's some massive trading opportunities coming, and they're not based on the big 7 names like Apple, Google, Amazon, Nvidia, Meta, and Tesla. In fact, our research leads me to believe we're on the brink of a divergence. So click on the link below. Join me at 10 a.m. sharp to see how I'm preparing for what could be a blowout trade opportunity in 2023. Don't miss out. It's happening at 10 a.m., nice and early. Just a couple hours from the time you get this video, maybe even an hour. Don't miss out. Like our video, subscribe to our YouTube channel, post videos, and I'll see you on the other side. Bye. Have a great day. Remember, if you need to ask questions, Roger at rogerscott.com.